Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host, Anthony Smith, and I'm also your lead economist here at FreightWaves, and I'll be jumping in for a shipper econ update soon. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Thursday carrier update presented by PowerFleet. I'm Zach Strickland, and we've got our volume index as well as our outbound tender rejection index continuing to climb even higher. Again, a nice gradual climb that's going up. This is actually, if you're a carrier, this is pretty good news right now because we're seeing a pretty strong steady climb in tender rejection rates and tender volumes. That means that you're going to see a nice solid strengthening of spot market rates and activity. Do not expect it to last forever, but at the same time, the slower this climb, the more steady and even this pace is, potentially the longer that it'll last. The odds of it lasting a lot longer and coming down a little bit slower on the back end are a lot stronger. So this is not a bad sign for carriers, at least in the near term, but at the same time, we are still in a historically heated market right now in terms of freight volumes and tender rejections. We're not going to hover around 19% forever. That is not a sustainable amount of tender rejection rate, so do not get too worked up and think that this is going to last for the next year. Well, I say that, but it's 2020. Who knows what's going to happen next? But volumes continue to climb to record levels. Another daily record for the outbound tender volume index for 13K, over 13.7, and now OTRI is up over 19%. Closing in on that March target, just over 19.5% where we were when things were in that panic mode, panic buying. But you see, even the tender rejection rate increase is a lot smoother, after that precipitous increase in, mid-June. It is a little bit more of a even keel pace going up to that 19%. So looking at the market itself, looking across the country, we can see some of our biggest markets. This is our market volatility map here, listed in order of market share. We've got Ontario leading the way with the largest single outbound market in the United States right now, showing a strong increase in tender rejection rates. Again, statistically significant strong increase. We've jumped up over 23% out of Ontario, California, out there on the West Coast. And you can see on the map here, we've got some tightness. This is our tender rejection volatility map. We've got a lot of tightness along the coasts here, specifically down there around California, and then up there in the Northeast and New England coastlines. The Northeast is showing significant increase in tender rejection rates. So anybody moving in either of these two markets today should expect increased spot market activity as well as some upward rate pressure on those spot market rates compared to this time last week. So again, the market itself is tightening, but those two areas of the country showing some of the most significant. And even up into the upstate New York area, tender rejection rates expanding through that. So we've got a lot of tightness happening. Panhandle of Florida right now showing a little bit of a tightening as well. Most of the large markets in the United States showing some sort of strong to moderate increase in tender rejection rates outside of, say, Dallas, which was heated there for a while, along Houston, not so much. Atlanta, Georgia, not showing a strong increase in tender rejection rates, but still an increase nonetheless, up over 19%. Looking at our weighted rejection index, so what kind of priority do we need to place on some of these markets? You can see some of the same areas highlighted here, but this is a combination of market share and tender rejection rate increase over the last week. Harrisburg, Pennsylvania, Allentown, Pennsylvania, Ontario, and Los Angeles, California are going to be your two markets or two areas to really target for some of the strongest tender rejection rate increases over the last week or so. Looking at the Harrisburg market, you can see that city or local outbound tender volumes are leading the way here. That's a very local market, and we've seen increases in that as well. You can see that on the chart there in the green lines, local outbound tender volumes, as well as long haul outbound volumes in the Harrisburg market continue to increase. We talked about this the other day. And real quickly, Ontario, California, showing a similar type pattern of increase in tender rejection rate, but it's in the tweener market as well as the short haul and local haul freight out there out west. So again, tweener haul, not necessarily great to operate in out west, but nonetheless, it's showing some significant volume increases, and that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm your host and lead economist here for this segment, Anthony Smith, and we're going to jump into what is arguably one of the biggest releases of the year, which is saying quite a bit, and that is the second quarter GDP. The newest GDP numbers just came out, and the headline number shows that there was a 32.9% quarterly decline from the first quarter. This is one of the most anticipated releases that we've had this year, and we're just going to jump into some of the initial findings. As we all know, with GDP, a lot of that is built around consumer consumption. And so that's really what builds a lot of the American economy. And what we saw in this latest headline number was that consumer consumption, personal consumption, decreased by over 34% in the second quarter. Now, this is expected to be the worst quarter for the entire year, so we're somewhat getting over a potential hump right now. And this is additionally the worst quarter that we've seen recorded since we've began recording GDP, which was the previous largest drop was around 10%. Now this goes back all the way to World War II. So when we're looking at the quarterly GDP number, there's a few things to take away here, especially when we're looking at how it relates to freight. As I mentioned earlier, a lot of this number comes down to consumer consumption, and so that has a lot to do with this number that we're seeing here. The other part is that it doesn't exactly correlate perfectly to what's happening in transportation and within freight. When we're looking at GDP, especially on this quarterly number, a lot of that's going to come down into services because a lot of it's going to be consumption of goods and services. There is a drastic decline in the services aspect for this number. Now, when we're thinking of services, you can think of things like travel, hospitality, going out to restaurants to eat, things that have really been affected in a really harsh way by the onset of COVID-19. These are things that are going to be also impacted here in some of these numbers. We also saw an increase of sorts that was offset, of course, by some government spending. Now, this is coming, of course, from we're seeing with the jobs claims, additional benefits, and government programs like that, which are indeed another talking point set to expire soon. Now, speaking of what's going on with jobs and the consumer, we also got an update for the initial jobs claims number. For the initial jobs claims numbers, we saw the second time back-to-back weeks of increase for the initial jobs claim number, showing that it was still around that 1.43 million mark for the most recent week. When we're looking at this number, this is showing us that there has been indeed a lot of resistance in the last couple of weeks when we're looking at jobless claims. This is coming, of course, from the onset of more COVID-19 cases popping up throughout the country. So that's going to give some upward momentum, unfortunately, to these jobless claims. Another area that increased were the continuing claims. It has a 2-week lag compared to the initial jobless claims number, and now we're starting to see some resistance building up there as well. And when we're looking at jobless claims, this is something that's going to really directly impact millions of Americans throughout the country. Now, there are going to be, of course, downstream effects where it comes down to these consumers being able to spend, and that we've seen happen with some of those GDP numbers that we just went over. This is also going to impact them on the confidence level as well, where we saw that consumer confidence dip down not only for the near term, but also for the long-term outlook for consumer outlook for the country as well. So we're looking at what the newest and latest releases are for the economy. Of course, that second quarter GDP number, but again, to remember that services play a bigger part in the GDP number. Not going to mean as much for transportation, as we've seen volume skyrocket as of late and capacity really tighten because those goods are still moving throughout the country. Inventory levels are still building right now. And when we're looking at jobs claims, there's still a lot of upward momentum going up right now. But those are the two hits for the economy and for shippers right now. Thanks so much for tuning in. That's going to do it for the Shipper Update. And that's also going to do it for this Thursday edition of FreightWaves Now. But as always, you can check us out on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.